Are you struggling to get a loan due to a bad credit history? Don't worry, you're not alone. In today's video, we'll explore the world of bad credit loans and discuss your options. Having a bad credit report can make it difficult to secure a loan. Lenders rely on your credit history to assess how well you've managed your money and your debt repayments in the past 6 years. If your credit score is low, it indicates that you have missed repayments and mishandled your finances. This raises concerns from lenders about your ability to manage future debt repayments. Your credit file essentially shows the level of risk a lender would be willing to take by approving your loan application. Consequently, some lenders may be hesitant to lend to you due to the possibility of not getting their money back easily. But what loans can you still obtain with bad credit? Well, there are options specifically designed for individuals in your situation, such as bad credit loans or bad credit payday loans. Bad credit loans are typically unsecured loans, meaning the lender primarily considers your income and your expenses to assess your ability to repay the debt. While they may still look at your credit report, your credit score won't hold as much weight in the loan application process. However, it's important to note that bad credit loans do have some differences compared to standard personal loans. The amount you can borrow with bad credit loans is typically lower, and the interest rates are typically higher. Despite these differences, bad credit loans function similarly to other unsecured personal loans. Once approved, the loan amount is paid out as a lump sum into your bank account, and you repay it through monthly installments with interest over a fixed period. Now, you might be wondering, can I get a loan with very bad credit? The answer is yes, it's still possible. However, loans for individuals with very poor credit scores tend to come with significantly higher interest rates compared to the rest of the market. Each bad credit lender has its own approval criteria when it comes to credit scores, so there's no specific credit score that's always going to get accepted or always get rejected. It ultimately depends on the lender you approach. You might be wondering, why would I choose a bad credit loan? Well, due to the higher interest rates, most people only consider bad credit loans when they have an urgent need for money. It could be to cover unexpected expenses like car repairs or replacing an essential appliance. Bad credit loans provide a way to pay for these essentials and spread the payment, including the interest, over several weeks or months. Let's explore the pros and the cons of bad credit personal loans. On the positive side, these loans may allow you to borrow money when no other options are available due to your poor credit history. Additionally, repaying a bad credit loan as agreed can typically improve your credit scores, opening up the possibility of better loan deals in the future. However, there are also some drawbacks. The amount you can borrow will be limited, and you may be subjected to higher interest rates. It's crucial to repay the loan as agreed, as failure to do so can result in legal action and even the involvement of bailiffs. Now let's discuss how you can get a loan with bad credit. To start, you'll need to search for bad credit loan providers and apply for the most suitable loan for your needs. Keep in mind that these loans are typically provided by online lenders rather than traditional banks. Most personal loan providers accept online applications exclusively. You'll need to fill out an online application on the lender's website and provide necessary documents such as proof of identity, address, and your employment income. If you're self-employed and have bad credit, don't worry, it's still possible to get approved for a bad credit loan. Lenders will assess whether the loan is affordable for you based on your specific circumstances. Some lenders even offer loans specifically designed for self-employed individuals with poor credit. The amount you can borrow as a self-employed individual will depend on various factors, including your income, existing debts, expenses, and the lender's policies. Many personal loans today allow self-employed individuals to borrow the same amount as a PAYE employee. When it comes to proving your self-employed income, you can provide the lender with your most recent self-assessment tax returns. These documents showcase your business income, expenses, and profits for the tax year. If you haven't been operating for a full tax year yet, but need to prove your income for the loan application, you may be able to use recent bank statements as an alternative. However, it's important to remember that lenders typically require proof of income when assessing loan affordability. If you can't provide this proof, you may not be able to get approved for the loan. Lenders need to ensure that the loan requested is affordable to you. Now, what if you're unemployed and have bad credit? Getting a loan as an unemployed individual with bad credit can be extremely difficult, but it's not impossible. Some lenders offer personal loans specifically tailored for people who receive state benefits. In certain cases, you may need a guarantor to secure the loan while you're unemployed. A guarantor is someone who agrees to repay the loan on your behalf if you miss any repayments. They're usually a close friend, partner, or a family member who may need to own their own property. It's important to be cautious and steer clear of loan sharks. These illegal lenders target vulnerable individuals with bad credit. They may initially appear friendly and offer enticing rates, but they can later increase the interest rate to exorbitant amounts and resort to threatening tactics if you're unable to pay. Can you get a loan with a credit score of 500? While a credit score of 500 is considered very poor, some bad credit loan providers may still consider your application, albeit with higher interest rates. Is it possible to get a mortgage with bad credit? Yes, it is possible, but your options will be limited. You'll likely be offered mortgages with higher interest rates, and the amount you can borrow will be lower. Using a bad credit mortgage calculator online can give you a rough estimate of your extra interest you may have to pay on the loan. Can young adults get approved for loans? As a young adult, your limited credit history may pose a challenge when seeking a loan. You can either search for lenders specializing in loans for young adults or take the time to build your credit rating before approaching a traditional lender. Remember, even if you have bad credit, there are still lenders out there willing to consider your application. Just be aware of the potential drawbacks such as higher interest rates and limited borrowing amounts. If you're interested in finding a loan for your circumstances, simply click on the link in the description below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it will give you access to quotes from around the UK tailored to your circumstances. It's totally free to do, and of course it won't affect your credit score. So click the link in the description below and fill out the short form to try it out.